Hey everybody, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the stock, commodity, bond, and forex market. So without any delay, let's go ahead and review these key markets, go over the economic data, and review whatever the heck's going on, alright? Alright, dollar index has had a sizable move up on Monday, and then had a sizable pullback as well. Now this is kind of unexpected. I honestly didn't think the dollar index would go up this much, but there is a good reason why. And basically, you could blame it on the S&P credit rating agencies. And basically, what they said was that the U.S. government's ability to repay its debt has gone down. So we're going to give you a downgrade in rating. Alright, so basically, Wall Street has come out and said, hey, you guys are doing a poor job of managing your money. And when Wall Street analysts say it, other Wall Street analysts agree with it. Therefore, they put in the calculations of the downgraded rating, and then they make a risk-adjusted, I guess, they make a different valuation or value-adjusted ratio or whatever they want to call them. But basically, when Wall Street downgrades the interest, the bond market or the U.S. government's bonds, they have to revalue what a treasury bond is worth. What generally happens is that the treasury bond market goes down in value along with stocks. Why do stocks and bonds fall in tandem when you get a rating downgrade? And that's quite frankly simple. It's because of the dollar index going up in value. If you guys notice, dollar index did go up in value, but it's not going up in value because people feel more confident about the US dollar. It's going up in value because people, or I guess countries, are basically, I guess you could say, or investors. It's hard to say. It's kind of like all over the place, but basically people are just converting into the U.S. dollar for the sake of safety. And basically, you know, it's kind of interesting because we're kind of the cause or the reason why markets are falling, but at the same time, people still find comfort and safety instead of the U.S. dollar when they don't find that same safety in the treasury bond market. But again, you know, we probably went from, like, I guess I'm thinking a AAA rating down to a AA rating, which isn't awful. It's just not as good as it could be. It means that the treasury bonds aren't risk-free. Now there's risk, apparently. And because of that, one must assume that with the dollar index going higher, stock indexes will go lower. Now, stocks are trading relatively flat, as you can see right now, but I anticipate them to have a moderate move higher throughout the end of the day. And I'm anticipating anywhere from a minor jump to the, I guess, previous area of resistance, or to the 50-day moving average, as you guys can see. 50-day moving average right here, or the 200-day moving average up here. So again, I'm not anticipating the 200, but I do anticipate up to the 50-day moving average. Now let's go ahead and review the bond market. Bonds are making back whatever they lost. They are getting back above the 200-day moving average, but if we go ahead and look at the 10-minute chart, you know, they've already broken the 200-day moving average down there as well. Now, you know, the White House came out and said, oh, you know, the rating agency is wrong, we're right, they have no clue as to what they're talking about, blah, blah. You know, I guess that's the standard approach. And basically, if I was the White House, I'd probably do the same thing. But the whole point here is that the government is doing a poor job of cutting back spending. Alright, so either you basically end the war, and you bring the troops back regardless of the consequences. Because quite frankly, we're not getting anything out of the conflicts in the Middle East. We're not going to get their oil. I mean, we're not going to annex them into the United States. I mean, back in the day, when you fought a war to conquer another nation. Right now, we're fighting a war for charity. I mean, imagine the amount of money we wasted on a war that could have been spent elsewhere. You know, like $500 billion a year. You could bring all of Africa out of poverty with $500 billion per year. Or you could have used it to not have caused such a huge amount of deficit spending. Jeez, isn't that novel? I mean, you spend $500 billion a year, and you borrow money for 7 years in a row. How much of a deficit does that cause? That causes a $3.5 trillion deficit alone. And that's how much money we practically spend on military, servicing the current military, on top of paying off previous debts from previous wars, the interest that we have to pay for those previous wars. So again, you know, when you fight a war just for the sake of fighting a war, you know, there's some really negative consequences for that. And I still hold to the belief that George Bush is the worst president in the United States ever. That won't ever change. You know, when you go through childhood, you're supposed to have somewhat of a role model or a leader instead of a country. But I don't think anybody saw that out of George Bush. I mean, if anything, George Bush was made fun of. Some dude threw a shoe at him. Just comes to show how much respect our president earns in the global scene. And quite frankly, if we the people, I guess, don't respect him, I'm guessing foreign people don't respect him either. And I don't blame them. I honestly don't blame the dude for throwing a shoe at George Bush, because again, $500 billion a year could have been spent better elsewhere. It really could have. And if you're gonna fight a war on terror, why are you sending in the Marines? I mean, isn't that CIA's job to fight against criminals? I don't really get it. I mean, isn't crime supposed to be fought by police and CIA and SWAT and stuff like that? I don't get why you would send in a military. I mean, I would send in secret agents. You know, if it was my choice, and train a lot of secret agents to go in there and infiltrate the terrorists. If they're going to play a game of I guess, mouse and hide and seek, the best way is to get rid of them in the shadows. You know, because that's where they dwell. They're not out in the open like a military is. You know, armies are made, and the military is trained to fight against another military. That's pretty much what militaries are designed for: head-on contact, not fighting a group of criminals. Criminals are basically, you know, if you want to fight criminals, you use the police, you use CIA, you use local authorities to do that. So yeah, that's kind of why I'm kind of, you know, disappointed with this whole entire war on terror. As far as crude oil is concerned, crude oil did drop dramatically. Because of that, you're seeing crude oil go all the way down to 107. Basically, strength in the dollar index causes crude oil to go lower. I didn't like crude oil's higher prices. I didn't think this rebound was going to last for much longer. And I was just pretty much a skeptic overall. And I think crude oil going down is pretty good. It should help the global economy, at least moderately. If the crude oil goes down in value, at the very least you spend less money at the gas station and you can spend more money buying stuff wherever it may be. Next, volatility index short term. It is bouncing a bit. So again, I guess it found some support at the 20-day moving average. I wouldn't be surprised if it went higher, but I certainly wouldn't be shorting the volatility index. Of course, if you short the volatility index over the longer term, chances are you're going to make decent money. But over the short term right now, I wouldn't short the volatility index. I would probably dedicate a small portion of my portfolio just to hedge against losses a little bit. If you see stocks fall, something will appreciate. At least something in your portfolio is going up in value. Kihu 360, alright, this is a stock that I've been short. And basically, I've been short on this thing back, you know, I think April 8th. Closed my position after it started going up a bit by around 3%. I got kicked out at around April 13 or something like that. It's like, okay, chances are there's probably going to be a minor recovery. And I was thinking this might be the right area to short. I shorted it, but then it got kicked out. So I was like, okay. And I shorted it again up here, but I got kicked out. So again, I'm losing small percentage points, but I did make a huge amount of profit just by shorting in this area, right through here. So it wasn't that bad. And then I was like, all right, I'm going to short up here. I mean, I think this time is the right time. And basically, because we got on that day, Wen Jiabao, the premier of China, and premier is basically the king of China, says, I'm going to do anything I can to stop inflation. They raise the interest rates. to around as 5.91% prime rate. And if you don't know what a prime rate is, it's basically the best interest rate you can get from the central bank. In reality, the best banks get much higher than that, somewhere around 6.5 to 7%. So, again, I discussed this before. Interest rates means a lack of liquidity. An explanation will be done in a different video, as I have very limited time to do it in this one. So again, Q360 does fall on that day. It did gap lower. It did gap up today, but it has continued lower since, and it is finding support on that 61.8% Fibonacci retracement area. So again, I have a trailing stop in place. If it gets too much out, if it rises too much, I'll get kicked out of the trade again. But at least I'll be at a pretty sizable profit this time after managing my losses on this, and yeah, and this one right here. Excuse me. Anyway, let's move on to the next chart, which is going to be ProShares Ultra Short 20-year bonds. You know, this ultra short should be going up in value, but rather it's going down in value. So I would avoid buying ultra short. Even though bond markets should continue to go lower, I wouldn't buy the ultra short. Anyway, I hope you guys like this. If you guys are interested in this stuff, please be sure to subscribe. I'll have more for you guys over time. If you guys are interested in my charting software or the charting software I use, please be sure to check out the link before. Check out the link right below. Anyway, I'll have more for you guys in the coming weeks and months ahead, so take care.